Top 5 strategies for day trading Bitcoin. Day trading cryptocurrencies can be an exhilarating activity for traders. However, it's also one of the more difficult time frames to trade. As we navigate this dynamic landscape, we want to equip ourselves with the most effective strategies to maximize our gains and minimize risk. In this video, we'll delve into the realm of crypto day trading and present a list of the top 5 strategies to consider. Whether you're a seasoned trader or just beginning your trading journey, get ready to explore the fast-paced arena of crypto day trading. What is crypto day trading? Crypto day trading is defined by a trader's expectation of entering and exiting a trade within the same day, also referred to as intraday or one-day time horizon. Therefore, being able to interact with intraday price dynamics is critical. How a trader engages the market during the time horizon will depend on the strategy deployed. Nevertheless, in general, traders will be looking for smaller price movements based on intraday market behavior. By trading intraday, traders can use tighter risk parameters than for longer time frames and adjust their allocation size accordingly, since the average size of a trade is larger than that used for a longer time horizon, given the smaller expected movement. In addition, there are no overnight holds in day trading, so that risk is eliminated. 1. High-frequency trading, HFT. High-frequency trading, HFT, is driven by automated mathematical algorithms that execute orders in fractions of a second based on preset criteria. These algorithms manage a high volume of orders, aiming to capitalize on minute price movements over extremely short timeframes, often mere seconds or fractions of a second. The lightning-fast speed of HFT necessitates the use of trading bots. By handling substantial order sizes, HF traders contribute to the liquidity of the cryptocurrency market. The primary objective of a high-frequency trader is to optimize speed and minimize transaction costs, prioritizing efficient execution and cost-effective transactions. 2. Long straddle. The long straddle is a day trading option strategy that looks to profit from market volatility. It involves buying both a put and call contract for the same cryptocurrency, with the same strike price and expiration date. This strategy may also be referred to as a straddle or option straddle. In a long straddle, it's expected that while one side of the trade may result in losses, the profit gained from the winning position will outweigh those losses, leading to an overall net gain. 3. Crypto arbitrage. Crypto arbitrage traders aim to capitalize on short-term price discrepancies between different cryptocurrency exchanges. They look to buy crypto on one exchange and swiftly sell it on another at a higher price. Alternatively, for shorts, they'll sell on one exchange and buy on another to close the position. Speed is crucial in crypto arbitrage trading, so automated tools are frequently used to swiftly seize arbitrage opportunities across exchanges. To fully optimize returns, keeping trading costs low is vital given the large volume of transactions. 4. Market sentiment analysis. Understanding market sentiment is crucial. It drives the rise and fall of markets based on changes in the confidence of market participants. Market sentiment represents the collective attitude of investors and traders toward a specific financial asset or the overall market. By analyzing market sentiment, traders can identify changes in attitudes and confidence that can influence changes in supply and demand, and, consequently, prices. Some elements of market sentiment analysis include the Fear and Greed Index, Bitcoin Dominance Ratio, news, social media, and Google Trends. 5. Breakout strategy. Breakout traders look to enter a trade when the price breaks out from a particular level, aiming to capitalize on the rapid acceleration in the direction of that movement. Breakouts can occur in either an upward or downward direction, breakdowns. The setups may include breakouts of trend reversal or continuation patterns, price breaking out through a moving average, or prices establishing a new high or low trend. Please like this video and subscribe to our channel and hit the notification bell for more videos like this. Thanks for watching.